Hi guys, welcome back. So today we will discuss about our first earning trade, TataElxsi. So earning season is starting today with TataElxsi, and as we discussed here earlier, you need to consider few points before going short volatility in this season or ever. So I told you yesterday that you need to consider the kind of expected move, the upcoming moves post that move, and the IV crush. So I was looking at my trade log. We maintain extensive trade log in earnings. So I was looking at my trade log and I found that this script trades around 35 IV, which is normal, like average IV 30 to 35, and I couldn't short it for more than 40 IV in last 1 year. But last running in Q2, I remember it was trading around 54 or 55 IV, but the move was huge. There was a 14% move, and share went down, and the IV went to the roof 70%. But it cooled off in upcoming days, and there was no major move post that, and share is range bound up till now. So this is the kind of the study we keep to ourselves, and that's how we are able to make view on the script and the IV. I will be sharing more tips in upcoming videos. For today, for TataElxsi, if I am to take a trade, I need to consider that it can give wild move. Second, the kind of IV crush. If it goes down wildly, if it gives 10% down move, so there's a huge chance that IV will not drop. And definitely IV will not drop. IV will shoot to the roof. It may go to 70, 75 level. So you need to consider that as well. And when you get into your any of the short volatility trade, please look at the payoff. Payoffs are available freely on Capital Mine, maybe on Opstra and Option Oracle. So go and check out. If you are comfortable with the risk, then only go for a short straddle. Or maybe you can just observe as it's the first running trade. Last time we had no trade on in TataElxsi before the move because we wanted to see how earning season is starting. But this time we will go with few lots, and I will not leave my any put naked where I don't want to take delivery. For your information, I will be taking delivery if share goes down wildly. I will keep few puts open for the delivery. So the last point is, if it goes down, the IV won't go down. So look at the payoffs and see the kind of wild moves it can have. Then put in the move, maybe 10%, and then you see the IV crush. If share goes sideways, there can be a 10% IV crush. So you can consider that in your payoff chart, in your payoff calculation. I was looking at my payoff, and I see if the move is within 5%, and you take a decent ID crush of 10%, you will not see any major losses or profit. So up till then, the share, so that is already inbuilt in the IVs. If you look at the expectations from the TataElxsi, you will find that the margins are going to shrink. There is a dent in revenue. Expenses are increasing. So this is all already inbuilt in IVs. IVs are trading around 50. So if anything's over and above happens on these numbers which are already expected, there can be wild move. So do take care of your size, and earning trades are very sophisticated trades. You need to put in a lot of efforts. You cannot trade uh, equity options like indexes. Indexes you can manage data, but here to trade equity options you need to have a view. Otherwise, sooner or later you will end up making big losses on one other script, one or another script, um, and you will find it useless to trade earnings. But here at Gamebooth, we work on a number of frequencies. There are 200 earnings, and we will be trading around 100 as usual, maybe more than that. So I will be sharing my experience with you in upcoming videos, and all the very best for today. Thank you very much.